Hey everyone, I don't need to tell you how popular artificial intelligence has been with investors in 2023. But in this video, I'm going to answer which one I think is the better AI stock to buy for 2024. I'm going to compare Palantir Technologies and C3.ai and answer which one I think is the better AI stock to buy. I'm going to compare these two on some vital financial metrics and their 2-year ahead forecast and compare them and weigh them against the valuation to come up with an answer which one I think is the better stock to buy. So let's jump right into this financial analysis.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
The first thing I wanted to compare these two on is revenue growth. And what I have here is trailing 12-month revenue. And you can see Palantir has done a good job increasing revenue over the last couple of years up to 2.12 billion. C3.ai at 284 million is increasing revenue, but not at the rate of Palantir. Notably, however, C3.ai recently introduced an AI product to market for enterprises and institutions, and that has the potential to boost revenue over the next couple of years. In just a little bit, we'll look at those estimates and see just what is that expected growth rate in revenue for C3.ai over the next couple of years, which incorporates the estimates for that new product, given that the analysts that make these estimates understand that this product is in the market and getting evaluated by enterprises. The next metric I wanted to compare these two on is cash flow from operations. And again, Palantir doing a better job on this metric, increasing cash flow from operations from negative 300 million all the way up to positive 489 million. That's phenomenal growth for Palantir. Meanwhile, C3.ai seems to be flat to slightly negative over time, decreasing and worsening its cash flow from operations down to 69.5 million over the last couple of years, although that seems to have bottomed around January of 2023 and looks to be improving. Let's hope this trend continues for C3.ai stock investors. And of course, operating profit margin is another important metric to consider. But with tech stocks, I would overvalue the cash flow from operations instead of the operating profit margin because of the significant non-cash expenses, namely stock-based compensation, which we will also look at. And so that kind of distorts the operating profitability figures. But still, in this metric, again, Palantir showing its advantage here with an operating profit margin of 1.71% and moving in the right direction, compared with C3.ai with negative 105% and moving in the wrong direction. So let's look at the estimates for the next couple of years. So according to a consensus of analysts, they suggest Palantir will grow revenue by 19.8% in 2024 and then 20.5% in 2025. They also think Palantir will grow their earnings per share by 20% in 2024 and another 19% in 2025, which will take Palantir's earnings per share from 25 cents in 2023 to 30 cents in 2024 to 35 cents in 2025. Solid growth in earnings per share, but not these explosive numbers that you would think is coming from these innovative AI companies. Let's look at C3.ai. It's expected to grow revenue by 19.8% in 2024 and 23.6% in 2025. That's an accelerating growth rate from the 14.7% in 2023. I always like to see investments increasing the rate of growth, and that's what C3.ai is demonstrating. However, it's not as impressive because C3.ai is losing so much money on the bottom line. Earnings per share loss of 73 cents in 2023. That's expected to improve to a loss of 27 cents in 2024 and then to turn positive in fiscal year 2025, which ends April 26, to 3 cents per share. So analysts expect C3.ai to be profitable in the fiscal year 2025, 2 years from now. That would be a Massive improvement from where C3.ai is. I just showed you just how much money it's losing, operating profit margin of negative 106%. So the next thing I wanted to consider is average diluted shares outstanding. The number of shares outstanding is an important financial metric. If a company issues more stock because it is running out of money or it wants to invest in a new growth project, it has the potential to decrease your earnings per share. Look up here, when I have a net income of 1,000 and shares outstanding of 100, my earnings per share is 10. You take the net income divided by shares outstanding and you get 10. But now let's say you increase your shares outstanding to 200 and you have the same net income of 1,000, now your earnings per share is just 5. The same is true in the opposite direction. If a company is losing money on the bottom line and it issues more shares, it spreads out the losses across more shares, thereby reducing the loss per share, which is a tricky way to reduce the loss per share. Look at this point here. A net loss of 1,000 with 100 shares outstanding creates a loss per share of 10. But if you take that same net loss of 1,000 and you spread it across more shares, 200 shares, you now have a net loss per share of just 5. So it's a tricky accounting trick to get your losses reduced on earnings per share. So you want to take a closer look to see where the improvement in the loss per share is coming from. That being said, you can see C3.ai increased its number of shares outstanding from around 80 million in 2021 to 118 million in the most recent update. Meanwhile, Palantir increased its shares outstanding from 1.8 billion to 2.32 billion in the most recent update. Both Palantir and C3.ai are diluting shareholders meaningfully. Still, the companies have excellent balance sheets, which I have shown you here. C3.ai has $762 million in cash and short-term investments and zero debt, while Palantir has $3.2 billion in cash and investments and zero debt. So they've both got a pristine balance sheet. Finally, I wanted to compare these two on valuation, and they are both expensive stocks, like truly expensive, not like slightly expensive. C3.ai is trading at a forward price to sales of 9.377, while Palantir is trading at a forward price to sales of 14.23. Given their growth expectations, these are expensive valuations, and it's partly due to the hype around artificial intelligence and these two stocks in particular. These have been two of the more popular AI stocks in the market in 2023 and for several years now. If I had to pick one of these two AI stocks to buy, I would pick Palantir, even though it's more expensive than C3.ai. I think Palantir has earned this premium valuation over C3.ai. It's performed better in terms of cash flow from operations, in terms of earnings per share, and the market perceives Palantir's product as the premium product, the best-in-class product for enterprise AI solutions. And so, for all of those reasons, if I had to pick one of these two to buy right now for 2024, I would pick Palantir. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.